So residential rental vacancies are at their lowest level since 2016 at 4.42% nationally, according to the latest TPN Credit Bureau's vacancy survey. This is due to demand for rental property outstripping supply amid a decline in home ownership. The current high interest rate climate is also a contributing factor. TPN industry principal Waldo Marcus speaks to us about this. Thank you so much for your time, Waldo. First, do give us an overview of what the survey is telling us.
Good afternoon, Tumisang, and thank you very much for having me on your show. The TPN vacancy survey is conducted across the country on a quarterly basis, and we engage with small landlords all the way to the large real estate investment trusts around the number of vacant units that they have within their portfolio, with specific reference to the residential market. And as you said during the intro, we've seen that the vacancies have come down from the previous quarter, which was recorded at 6.69%. And at the first quarter of this year, it dropped to 4.42%. That's the lowest that we've recorded since we started the survey in 2016. And what the picture that's being painted here is that we see that consumers still remain under pressure. High interest rates are preventing people from going into the property owner market. But apart from that, there's also additional other costs that one needs to consider when purchasing a property. Rates and taxes have increased considerably over the years, as well as repairs and maintenance. So a lot of consumers and households are opting to rent rather than buy at the moment.
Interesting, because the latter part of that then gives a little bit of a booster to the rental property market in the context of this particular survey and the reading overall. How much of that is factored into overall activity in the property space?
So the overall activity we've seen during the pandemic, lower interest rates, people then entered the property market, and we saw purchasing of residential property increase during this period. And as the Reserve Bank entered its hiking cycle, and it still remains the highest it's been in 16 years, and that has really benefited the residential property market when it comes to rentals. What we've also overall seen is that the number of properties that is fully owned has decreased from the previous years. This is according to the General Household Survey that was conducted by Statistics SA. To give you an idea, about 56% of consumers own their property outright. And then if you look at the number of people that's renting, that is about 23.9%. So a substantial number of households in South Africa is currently renting. And we expect this to continue until we start seeing the interest rates coming down substantially, hopefully to start coming down the end of this year, moving into next year as well.
It definitely changes the playing field and dynamics within the property sector in this country. From COVID-19, there was a trend that was emerging that at least while there is an increase in rentals, it did also then indicate that homeowners were not necessarily selling their properties, and a high interest rate environment means exactly the same. But it is a bit of a difference, because now we can talk about consumers that are still feeling the financial pressure. How does the sector then weigh both those sides of the coin?
So what we've seen is that we also measure the various rental value bands, and those rental value bands is a very good indication for us in terms of where the demand really sits. Prior to COVID, we've always seen relatively high vacancies in those paying less than 3,000 Rand a month rental. That increased further during the pandemic. Quarter one of this year was the first quarter that we've seen a substantial drop in the number of vacancies in those lower value rental bands. It almost halved from quarter four to quarter one. That's to 4.51%. Again, those paying between 3,000 and 4,500 Rand a month rental, they're sitting at 6.11%. Those paying between 4,500 and 7,000, they're about 5% vacancy rates. What we do see found very interesting is that the higher rental value band, so those consumers that can afford a more expensive rental property, those values between 7 and 12, they're at 4.3%. And those paying between 12 and 25, so we consider that as the luxury rental value market, they're sitting at the lowest vacancy rate in South Africa. That's at 3.57%. And those dynamics changed. We saw that during the pandemic, we saw those higher luxury rental value bands see higher vacancies. And that's also because people were purchasing property with those, taking advantage of those lower interest rates. And as those interest rates are going up, we started seeing people taking up those properties. And there's other factors that need to be considered. It's not just about interest rates. And I think that is a very pertinent point to make. It's also what drives the consumer in terms of uncertainty, the flexibility to move, immigration, etc., which is becoming more and more prominent in the residential rental market at the moment.
As a parting shot, what then is the near-term outlook? Interest rates are going to be with us at these elevated levels for a little longer.
It really depends on who you ask. I think some of the economists are still expecting interest rates to come down in Q3 of this year. The recent stats that was brought out by the Reserve Bank show that we still have elevated inflation rates. We expect interest rates to start coming down in Q4 and really start moving downward at the beginning of 2025. So that means that we're still going to have strong demand within the residential rental market. We do, however, expect some of these vacancies to start turning as consumers still remain under huge pressure. Debt burdens are increasing, and we're still sitting with high unemployment numbers in the country. So until we start seeing those numbers coming down, it usually bodes well for the residential rental market. But still, we do foresee that vacancies are going to start slowly creeping up, also with additional supply that is coming online.
Thank you for your contribution. Waldo Marcus is with the TPN Credit Bureau speaking to us this afternoon.